Hello everyone and welcome to Investing Angles Weekly Digest. This week we have plenty of data and lots of items to discuss, and what we'll do, we'll record just two parts of it. First part today and the second one tomorrow. In the part one we will discuss Volatility Index, TLT and US 10-year yields, BDI, Baltic Dry Index and Dollar Index. After that, we will discuss relationship between Canadian dollar and the US counterpart. In the commodities, we'll talk about silver and natural gas and the two special features of today, sterling and its relationship with US dollar, and we'll wrap up this first part of the digest with a discussion about Microsoft. But before we begin, please make sure to subscribe to our channel that you always know when is the new video being released. Okay, so this is the Volatility Index and its closure on Friday. What we are seeing here, a fairly strong bullish engulfing on the daily frame. This is most likely going to be a reversal, and we are expecting higher prices on Monday, Tuesday, and perhaps after that. This 3-day frame also closed on Friday. We should probably pay more attention on the 3-day candle, which closed on Tuesday. It was a fairly strong bearish bullish engulfing as well, although it had a very high upper week, but nevertheless it was bullish. And in the next 3 days we had a huge volatility spikes up and down, and as a result we had a neutral doji, which has better chances to move higher. And speaking about the weekly closure, that's been an interesting one. Although that candle is red, however, it most likely gonna be bullish, and because it found support at two major support levels, like 8 weeks MA and 20 weeks MA, and the most importantly that we had a very fairly rare bullish cross, 50 over 100 weeks moving average. If we look at the bigger chart like this, so this cross happened last time here. It was June 2022, and here it was March 2020. Well, perhaps we can see something similar to what we've seen in the second half of year 2022, or God forbid, it's gonna be something like in March or April 2020. We'll see. So the signal is here, the break is here, and the chances for, at least for short-term volatility to spike, are fairly significant. Let's see how it plays on Monday. Now let's move on to the next part of our presentation, and this is bonds or yields. What we are seeing here is the map of 2, 5, 10, 20, and 30-year yields. What we are seeing is then on a 30 and 20-year, we have clear bullish candles, and the chances for move higher are significant, especially if we consider the freshly made 100 over 200 days moving average bullish crosses like here, and the lines stop just 0.3 basis points apart before crossing for the 10-year, and this is probably the first thing that's going to happen upon opening on Monday. Now let's have a look at the 10-year closely. So what they are seeing here is the 12-hour frame technically bullish, the same bullish formation most likely on a daily frame. The weekly frame is bearish technically, but the technical support is kind of weak, and we need to see a strong confirmation in order to believe that this is going to be a lower low. And on the monthly chart, it's an interesting candle here. So it could be a bearish, but it could be also a bullish continuation. In the context of the previous candles, I would expect it to be a consolidation, like a horizontal one or slightly downward, and then we move higher. Well, in this case, in the worst case scenario, I think we're going to lose about 0.5, maybe 1% before this rally will continue, or immediately after that we can see a move down, a move up. Very long-term perspective, we have here 100 over 200 months golden crosses formed on December 2024, and this combination of crosses advising us that we are going higher. Perhaps after a little pullback, but this little pullback, I highly doubt it's going to change in the direction which are kind of gaining speed here. All right, and from the perspective of Elliott waves, this is an inverted scale for US 10-year yield. What we are seeing here, we discussed this chart a couple of times. I just would like to emphasize, especially for our new viewers, so that from the perspective of Elliott waves, the big wave that started in July 1981 and ended in July 2020 has been corrected, or a diagonal, or perhaps some people call it a wedge. So from the theory perspective, such move needs to be reversed, and ideally it could hit its origin, which is 15%. What we are seeing here is a totally different character of the wave. If the wave up was clearly corrective, and we have so many overlaps here that there is no way we can identify a clear wave 3, for example. So here we have a fairly clean impulse, and maybe let me visualize it. So this is 1, 2, 3, 4, and 5. So 5 waves, fairly clean, no overlaps. And now what the yield is doing is potentially forming either wave 2 or a bigger wave B. And there are two options here. One is to build a much bigger impulse, which will last for like 15, maybe 30 years, who knows? Or it's going to be a shorter correction, but another wave down is expected. After a bigger consolidation, smaller consolidation, but wave down will be there. And how far, how long, that's something that we are yet to learn. That's the perspective of Elliott waves, and some say it's impossible to forecast it, but well, it works. And now let's move on to TLT, the most tradable instrument. What is happening here on the daily frame? We are seeing a bearish reversal, technically bearish reversal at our top, and the chances for a move down are fairly high for the next week. A freshly made bearish cross, 100 over 200 days moving average, and a strong resistance line, 50 days moving average. So it looks like we get a rejection here. The weekly frame is also bearish, although it had a chance to form a bullish candle at the beginning of the week. Unfortunately, it reversed, and now we are seeing back below the resistance line, and the chances for a slide are significant. Similar thing happened with the 10-day frame. It had a chance to form a bullish inside up, but failed. And as a result, the monthly frame closed with a tiny doji, which has more bearish qualities than the bullish ones. And I would like to emphasize this is a huge one. 50 over 200 month moving average bearish cross. It happened only once before, and it was in 1950s. All right, so that's the candle perspective for TLT, and let's have a look at the chart actually. What we are seeing here that TLT advanced since the middle of January, but the wave that it formed was rather corrective, I would say, although it has 1, 2, 3, 4, 5. Potentially the wave 1, however, was a very questionable at this moment because it didn't have any clear impulse. It could be a diagonal, but still questionable. Wave 3 also has lots of concerns because of its structure. In general, there are chances for several paths here. I think that the most probable here are either red or green. The blue is kind of not reliable at this moment. We'll see what kind of wave TLT forms downward. If it is impulsive, well, I would say that we are probably going to a lower low and we're crossing this low line and moving in an impulsive structure. However, if the wave is corrective, then we should expect another wave upward. The wave is still young, and we are not very sure about its perspective. So we need at least a couple of more days in order to evaluate and see what will happen here. All right, so if you're interested in a bigger chart perspective, you can refer to our website and have a look there for long-term and mid-term perspective for TLT. Now let's move on and have a look at the Baltic Dry Index. This index is believed to be a harbinger of the market moves, and that's what we are tracking on a regular basis. Unfortunately, the index has been bearish for a while, and something that we highlighted back in December 2023, we said that the index is going down, and this was our chart. So we called the top when it was almost 2,500, and since then index lost over 70%, and right now it is approaching the perspective bottom of this triangle or rectangle, pardon. And unfortunately, that all candles that the index closed in January were bearish. The weekly, 10-day frame, and the monthly frame, everything looks bearish, and the chances for move lower are fairly significant at this moment. So we treat this index bearish until we see a clear reversal or confirmation. And on the short-term frame, the Baltic Dry Index, something that we called in the middle of this year in July, September. So we said that it was in October. We said that the index formed a triangle which is going to resolve downwards, and this was our chart. So far, we are seeing that from 2000, index is right now sitting at 700, and the chart remains intact. So it broke through the C. Well, I think it's going to be forming a bottom here, but we need to see a clear confirmation. All right, so that's the Baltic Dry Index, which many believe impossible to be forecasted, but nevertheless we do it. So now we are talking about dollar index. What is happening here? The dollar is on the rise, and this is our chart that we discussed way in November 2020, year 2020. So it remains intact. This is the latest upgrade to the chart in November 3rd, 2023. And since then, the chart remains intact. So we are seeing it's progressing up. Our immediate target is somewhere between 113 and 120. Let's see how dollar moves there. That's the perspective. And from the candles perspective, we are seeing, first of all, the monthly frame. The monthly frame is formed three white soldiers, and after that we are seeing a doji, which formed in January, and now this is a consolidation candle. So what we would expect, a move horizontally or slightly downward before the move resumes higher. So, and on the weekly frame, we had a tower top, but it was reversed, not entirely, but at least this green candle on the weekly frame put a hard stop here. So the chances for the dollar to continue upward here are fairly high. And this is the daily frame. We had a clear bottom, perhaps even inverse head and shoulders. And the chances for dollar to continue to rise are significant. Well, that could be an impact on precious metals, but we'll see how it goes on next week. So far, dollar is bullish. And before we move to the next chart of our presentation, I'd like to show you the Investing Angles website, where we keep all our information and share all our articles. So the indices, we support multiple indices, commodities, gold, silver, natural gas, oil, currencies, treasuries, section, crypto, stock library, most popular and large stocks. We have live trade, a swing trade account, which is doing very well for over 2 years. The video section, Discord room, and many other things. So if you're interested in evaluating it, we are offering right now a free reader subscription for all new members. And well, you can evaluate, but if you want a deeper evaluation, well, there are different memberships available. Okay, so then let's move to the next section of our presentation, and this is a poor loonie. As a disclosure, I'm a Canadian, and this section is really painful, but nevertheless, this is what differs us from other services. We always say what we are seeing, not what the public wants to hear. All right, so that's a Canadian dollar chart, and we made this call in September 2022 when the dollar was 131. We said that it is going to be moving higher, and the US dollar is going to be moving higher, and the Canadian will lose a lot. So since then, since the call, Canadian dollar lost almost 11% to the US counterpart. This is a very sad situation, and the candles send a clear message, and many of our Canadian compatriots dismissed the forecast, confident that the Bank of Canada would not allow such a move. Fast forward 28 months, and the reality is quite opposite. The Bank of Canada actions have only accelerated the decline. All right, so let's move on to the next one. This is the one that we shared in August 2023. We said that Canadian dollar is going to be way back behind the US one, and this is the ratio that we projected there with great confidence. Well, again, nobody believed, but anyway, so we see that the US dollar or Canadian dollar touched this level this week, And well, that's there is still a perspective to move higher. I think that in a couple of months, maybe in a couple of quarters, we should see 150. That would be something. Anyway, let's move on. This is the long-term frame, what we made long ago, a few years ago, and this is the Elliott wave perspective of how we are tracking this one. So we believe that's Canadian US Canadian pair right now in wave 3, which has this target, and 150. I would like to emphasize it is right here. And the final one, for those who more familiar with the inverse pair Canadian to US, this is what we are tracking also. This is our initial chart that we started tracking in March 2024. So far it is being on track. So the Canadian is approaching 0.67, well, with the chance to fall to 0.58. That's our estimate at the moment. Okay, so that's a poor loonie. Let's leave it behind, and let's talk about silver. What we are seeing about silver, it's at the same time it could be exciting and it could be concerning. If we look at the weekly frame and the monthly frame, we can see that silver closed with bullish candles, and silver even formed an 8 by 20 EMA weekly bullish cross. Technically, it even closed above the red line and formed a bottom. So the chances are higher. The chances for a continued move higher are very high. At the same time, the monthly frame formed a bullish engulfing. However, this was not entirely bullish because it would need a bit to move a bit higher in order to fully cancel this formation. However, nevertheless, we are expecting that we will see a move higher. However, I'd like to emphasize that the move higher, it doesn't mean that the next candle will be green. We might see a spike at the beginning of February and a reversal. It could be even one day. So the chances for the daily frame, technically this is a bearish formation. However, it could be bullish depending on the next candle. And I would like to emphasize the biggest scare here. It's a quarterly bearish engulfing, also a hammer that silver formed in December. So it is still active and it needs to be reversed. So silver needs to keep the momentum bullish for another 2 months. Let's see how it makes it. Speaking about the potential longer term chart, we might see silver, if everything goes well and silver recovers, we might see it moving towards 35.5, 41. That's the perspective. And if we look at the smaller term, this is the concern. We have what we are seeing here is the first wave of the bottom that silver made in the middle of December. This wave failed to form an impulse, and this is a big concern. It still kind of can be treated as a leading diagonal with for wave 1 and the corrective wave 2. However, it's not a very typical reaction to a completed diagonal. I would expect wave 2 to be, first of all, sharper and longer, so almost reaching the origin level of wave 1. So far, this final wave is an impulsive but we'll see how it goes. So this I'm just a bit skeptical about this red perspective and still keep this blue target here on the table because not all the concerns have been cleared. The next chart is the SLV. This is the most mixed and the concerning chart. So first of all, I'd like to say that the weekly frame closed with strong bullish engulfing, and the chances technically are for the bulls are higher. However, I would like to say that this daily frame, this complete bullish bearish engulfing, and on the daily frame, and another concerning candle here on the 2-day frame, they are kind of very disturbing, and we need to see a confirmation. So we need to see a clear rejection of these candles. If, however, silver moves down here and closes below the red candle with another red candle, it could be a bigger reversal. And in this case, this green candle for the weekly closure will be negated. Okay, so that's about silver. Let's talk about natural gas. Just a quick overview of candles. What we are seeing here is that the monthly closure was kind of neutral. While the candle was neutral bearish, in a bigger context, this is a bullish formation and the chances for a move higher are significant. Speaking about the weekly, we are seeing that these 50 days over 50 weeks over 100 weeks moving average is curling up, and the chances for this trend to continue higher are significant. The candle failed to form a tower top, and it stopped right at the to the basis point on this 20 weeks moving average, and the daily frame formed an ideal matching low, which could be a bullish one if it receives a confirmation on Monday. So far, natural gas is neutral, leaning bullish, but we need to see a confirmation. If you are interested in our charts, today we shared a large monthly update for the new natural gas, and there are quite a few charts there. Now let's move on to our special features of the day. Sterling. What we are seeing here. First of all, this is the chart that we are tracking since October 2022. So far, it's been on track. No news here. And as this is the quarterly chart, I would like to emphasize a huge bearish engulfing that British pound formed here, and the perspectives of a move lower are fairly high. So how long will it take to reach parity? I don't know, but it looks like in a couple of years we might see it's there. And if we look at the candle's closure, what we are seeing is that the weekly kind of negated the potential move higher. The monthly is simply moving lower, and I already discussed this is the quarterly closure in December. It was a huge bearish engulfing. The chances for a move lower are fairly high. And for the daily frame, I'd like to enlarge this a little bit. What we are seeing here is a freshly made, just a couple of days ago, 100 over 200 days moving average. This is a very concerning print, because a very similar print was made, and let me scroll it here. The very similar print was made right here in September, October 2021. After that, you see what happened. So the pound was falling for several years, and it almost reached parity with the US counterpart. All right, so that's something that I would be looking for, and I wouldn't be surprised at all if the British pound will go there as well. And basically this assessment is very well aligned with what we are seeing from the Elliott wave perspective. And the final part of our presentation here today is Microsoft. This is the candle map, and what I'd like to emphasize that until the last 2 days of the month, Microsoft was trending very bullish, and but unfortunately the bearish forces were very high, and well, cannot do anything. So now the Microsoft is bearish on the daily frame. It is bearish on the weekly, closed with a very strong hammer here, and technically it's not a surprise at all, because in December Microsoft formed this gravestone doji, and almost for the entire month it tried to negate it, but failed, and now formed in the bearish engulfing for the doji. Well, the chances for a move lower are fairly high at the moment. And just one more data point. This is a 10-day frame, and the failed attempt to make a rising 3 methods, and instead it is a confirmation of a reversal on the 10-day frame. Now let's have a look at another data point. What we are seeing here is probably one of the favorites Microsoft formations, is head and shoulders. They had head and shoulders in year 2021, 2022, followed by a significant decline, and right now we are seeing somewhat similar and a comparable size. So 17% decline from the top to the neckline, and the potential from the neckline towards the ideal target, it would be another 20%. Yeah, we'll see how it works. That's the classical pattern. Speaking about the Elliott waves perspective, that's another data point for us. What we are seeing here is the potential impulse down, which Microsoft formed in July, August. After that low, Microsoft failed to form an impulsive wave. At best, it could be ending diagonal, but there is also a chance that this is just simply a wave 2, an extended wave 2, or wave B as WXY. Let's see how Microsoft develops the next wave, but this wave of the top in the middle of December looks more impulsive than a corrective one. If the next wave is impulsive, then we probably can see it ending somewhere here in the blue rectangle. Well, that's the perspective. And the final one, and probably the most concerning, this is MACD perspective for Microsoft on a monthly chart. The monthly chart made a bearish cross way back in November, and since then we were tracking this one. In October we spotted it, saying that it's gonna be a cross in a month, and it did exactly what we said. So since then Microsoft slowly moving down, trying to do a reversal and a continuation of the right, but unfortunately the MACD is leaning downward. So if we track, if we compare the size of decline here in 2021-22 and project the same decline here, perhaps we can see Microsoft at 285 and finding support perhaps on the 100 months moving average, which is a purple line here. Well, that's a projection for now, very like this, for example. And now I change the color to match it. Okay, so that's the perspective, somewhere here. Okay, so that's been all for Microsoft, and this wraps up our first part where we discussed volatility, bonds, TLT, Baltic Dry Index, DXY, Canadian dollar, silver, British pound, and Microsoft. The next part, second part, we are planning to record tomorrow, and it will be featuring major US indices and probably a few commodities and other instruments we are not yet decided about. Thank you very much for watching, and tune in for the part number 2 on Sunday, February 2nd. Happy trading, everyone.